Hello and welcome back to MonsterInvest. I am your host, Daniel. Have you ever played a board game where someone secretly changed the rules halfway through the match? It is frustrating, it is chaotic, and if you're not paying close attention, you lose. Well, that is exactly what is happening to the global financial system right now. While we go about our daily lives, buying coffee and paying bills, the fundamental operating system of money is being rewritten. We are not just seeing new stocks or new apps. We are seeing the death of the old way of wealth creation and the birth of something entirely alien. Most people think the future of investing is just about buying shares of the next Amazon or Tesla. They are looking for a faster horse, but what is coming isn't a faster horse. It is a teleportation device. We are moving from a world of static, heavy assets to a world of fluid, programmable value. And the scary part, this shift is happening silently, in the background, beneath the headlines. So today we are going to pull back the curtain. We are going to look at the invisible mechanics that will define your financial destiny for the next 20 years. We are going to talk about the artificial intelligence that will know your fears better than you do. We will talk about how a skyscraper can be dissolved into digital dust that you can hold in your digital wallet. We will discuss the end of the human expert, the rise of the Metaverse economy, and the new moral code of money. This isn't a prediction, this is a preparation, so let's get into it. Let's start with the most disruptive force we have ever seen, artificial intelligence. But I want you to erase the image of a robot picking stocks. That is too simple. I want to talk about financial intimacy. To explain this, I want to introduce you to a hypothetical investor named Sarah. Let's look at Sarah's life today. She works hard, saves a bit of money, and maybe puts it into a standard index fund. She is treated like a statistic. Her bank puts her in a bucket labeled moderate risk, along with millions of other people. The system doesn't know her. It doesn't care if she loses sleep when the market drops. It gives her a generic solution for a unique life. Now let's fast forward just a few years. Sarah opens her investment platform, but she doesn't see a wall of numbers. She speaks to her AI. This AI is not a chatbot. It is a hyper-intelligent guardian. It has been learning Sarah's psychology for years. It knows that when Sarah is stressed at work, she tends to make impulsive financial decisions. So on a Tuesday morning when the market crashes by 10%, Sarah's instinct is to sell everything. In the old world, she would have clicked sell and destroyed her wealth. But in this future, her AI intervenes. It says, "Sarah, I know you are worried. But remember, our goal is the house down payment in 5 years. If we sell now, we lock in a loss. Based on 50 years of data, the best move is to do nothing. I've actually already harvested some tax losses to offset this drop. You are safe." This is the game changer. It is the shift from managing money to managing behavior. The wealthy have always had human advisors to hold their hands. AI is democratizing that luxury. It allows for what we call the segment of one, a portfolio built not for a demographic, but for a single human soul. It creates a custom index fund just for Sarah, excluding companies she hates and doubling down on sectors she loves, rebalancing instantly, day or night. The era of the generic investor is over. But if AI changes how we invest, the next trend changes what is possible to own. This is the concept of tokenization, or as I like to call it, the liquidity of everything. Let's look at another character, Liam. Liam is a 21-year-old student. He is smart, but he has very little capital, maybe $100. In the world we know today, Liam is locked out. He cannot buy a commercial building. He cannot buy a Picasso painting. He cannot buy a vintage Ferrari. Those are trophies for the ultra-rich. Liam is stuck on the sidelines. But the future destroys these gates. In the near future, the owner of a $500 million skyscraper in Manhattan decides to unlock the value of the building. They don't sell it to another billionaire. They tokenize it on a blockchain. They split the ownership into 500 million digital tokens, each worth $1. Liam takes his $100 and buys 100 tokens of that skyscraper. He is now a property owner. He receives rent dividends sent directly to his digital wallet every second, in real time. And if he needs money for lunch, he swipes his phone and sells 5 tokens instantly to a buyer in Tokyo. The liquidity premium vanishes. We are unlocking trillions of dollars of dead capital, assets that sit still for decades. In the future, everything will be liquid. Real estate, fine art, intellectual property, even future revenue streams of athletes and musicians. Liam could invest in his favorite upcoming singer, buying a token that gives him a claim on 5% of her future streaming royalties. If she becomes a star, Liam's portfolio explodes. The line between being a fan and being an investor will blur completely. Now this leads us to a cultural shift. If everyone can invest in everything, who do we trust? This brings us to the death of the expert and the rise of provable performance. We have all seen the guys in suits on TV predicting the market. Half the time they are wrong and there are no consequences. But the future of investing is built on the blockchain, which is an immutable ledger of truth. Imagine a global leaderboard. On this board, you see a 17-year-old kid from a village in India. You don't know his name, you don't know his degree. But you can see his wallet address. You can see, with mathematical certainty, that he has generated a 40% return for 3 years straight by trading renewable energy tokens. Next to him is a hedge fund manager from Wall Street who is down 5%. In this world, credentials mean nothing, results mean everything. You will be able to copy trade that kid in India. You click a button, and a smart contract automatically mimics his trades with your money. He gets a small cut, you get the returns. This is the financial creator economy. The best investors won't work for banks. They will be independent nodes in a global network, judged solely by their code and their performance. However, with all this technology, our values are changing too. We are moving towards data-driven morality, or what we used to call ESG, but on steroids. For a long time, sustainable investing was a joke. It was a marketing sticker. Companies lied. They said they were green, but they weren't. But in the future, there is nowhere to hide. Imagine you are looking at a company that claims to be carbon neutral. In the past, you read their PDF report. In the future, you look at the raw data. Satellites orbiting the Earth are tracking the methane emissions from their factories in real time. Sensors in their supply chain track every drop of water used. This data is fed into your AI. If a company lies, the AI sees it instantly. The market punishes the stock price before the CEO even finishes his morning coffee. We are moving from trusting corporations to verifying them. This means your money becomes a vote. You can tell your AI, I want to maximize returns, but I refuse to support any company that uses child labor or has a carbon footprint above this level. And the system will enforce your morals with ruthless efficiency. And finally, we cannot talk about the future without talking about the destination. Where are we spending this money? We are entering the Metaverse economy. I know the word Metaverse sounds like a buzzword, but strip away the hype and look at the behavior. The next generation values their digital identity as much as their physical one. They care more about the skin in their video game than the shirt on their back. This creates an entirely new asset class: virtual real estate, digital goods, artifacts that exist only as code. We are already seeing virtual land sell for millions. Why? Because that is where the attention is. And in an information economy, attention is the most valuable asset. You might think it is silly to buy a digital house, but is it any sillier than buying a domain name in the 90s? The early investors who understand that the digital world is becoming the primary world will make fortunes. We will see economies inside of games that dwarf the GDP of small countries, and you will be able to invest in them, lend money in them, and build businesses in them. But I have to be honest with you, this future is not all sunshine and rainbows. It is the Wild West. It is dangerous. As we move toward decentralized finance, or DeFi, we are removing the safety nets. There is no customer support on the blockchain. If you lose your password, or if there is a bug in the smart contract code, your money is gone forever. There is no FDIC insurance for a decentralized protocol. We are going to see a massive clash between the government and this new crypto economy. Regulation is coming, and it will be heavy. We will likely see a split world. On one side, the regulated garden, safe, slow, government-approved digital currencies. On the other side, the open frontier, wild, risky, anonymous, and potentially much more profitable. You will have to decide where you want to play. You will need to become digitally literate. The illiterate of the 21st century will not be those who cannot read and write, but those who cannot understand a digital wallet or a smart contract. So let's wrap this up. What have we learned today? We learned that AI is evolving from a tool into a partner, managing our psychology, not just our portfolio. We learned that tokenization will break the world into tiny, liquid pieces, allowing anyone to own anything. We learned that the authority of the expert is being replaced by the truth of the blockchain. We learned that ESG is moving from marketing fluff to hard, satellite-verified data. And we learned that the digital economy is becoming as real and as valuable as the physical one. The train is leaving the station. Actually, the rocket is leaving the launch pad. You don't need to bet your life savings on these trends today. But you cannot afford to ignore them. The biggest risk you face right now is not volatility. It is irrelevance. It is sticking to a strategy designed for 1985 in a world that is hurtling towards 2050. Open your eyes, stay curious, learn the new tools, because the future of investing belongs to those who are brave enough to embrace the change. Thank you for listening to this episode of MonsterInvest. If this deep dive gave you a new perspective, please hit that like button right now. It helps us huge amounts. And share this specific episode with a friend who needs a wake-up call about their finances. Don't forget to subscribe so you don't miss the next wave of innovation we cover. I'm Daniel. Keep learning, and I will see you in the future.